Welcome, day traders. With extremely high uncertainties surrounding economies and financial markets at home and abroad, the bank will patiently continue with the monetary easing, the Bank of Japan said in a statement on its monetary policy decision. Recently, Japan has significantly advanced in the field of space technology. On Saturday, January 20, Japan's uncrewed smart lander for investigating moon spacecraft touched down on the lunar surface. For its extremely accurate landing precision, it was nicknamed Moon Sniper. And this lunar lander mission made Japan the fifth country to land on the moon successfully. This significant achievement has strengthened Japan's status as one of the world's leaders in space technology. Meanwhile, Moon Sniper's landing has geopolitical and economic importance. The three countries that have made a moon landing since 2000 are in the same region. China, India and Japan are engaged in a regional competition in many areas, including aerospace technology. In addition, these achievements help establish themselves as economic leaders on a global scale. Therefore, the reputation of the Japanese economy and companies in the world markets is being boosted by the successful lunar mission. At the same time, the Japanese currency remains under pressure from domestic problems. In the aftermath of the devastating New Year's earthquake and against the backdrop of dovish comments from the head of the Bank of Japan, the regulator's decision to maintain its previous monetary policy settings was quite predictable. After a two-day meeting, the country's central bank left its benchmark negative interest rate at 0.1% today. The upper limit of the yield on the government bonds was also left unchanged at 1%. At the same time, Bank of Japan Governor Kazuo Ueda said the central bank would not hesitate to take additional easing measures if necessary. We will only be able to think about any moves to change settings after the junta results. Junta refers to the annual wage negotiations between enterprise unions and employers in Japan. Its results will most likely only become clear in April. However, the Japanese currency has already reacted to these prospects. Moreover, Kazuo Ueda said that the Japanese economy was expected to recover gradually. Meanwhile, the Bank of Japan is likely to achieve its 2% inflation target. This means that the country's central bank is moving towards tightening its monetary policy. As a result, the dollar-yen pair dropped sharply below the 147.20 level during today's Asian session, trading within the bearish range of 146.90 and 148.60 on the daily chart today. However, the pair remains in a bullish territory, therefore a scenario where the yen declines and heads towards the 148 and 148.65 resistance area cannot be ruled out. On the other hand, the support level has shifted lower and it's located in the area of 147.00 and 146.50. During the Asian session, the US dollar index suffered significant losses. Against its six major counterparts, the greenback plunged to support of 102.98 from a resistance of 103.38. With the Wall Street hitting new highs later last week and earlier this week, the US dollar has weakened significantly. The technical support level has shifted to the area of 103.00 and 102.70 today. At the same time, the US dollar index remains in the overbought zone. Therefore, it may move to the resistance zone of 103.50 and 103.70 since the US currency is supported by safe haven demand. Notably, the potential supply chain disruption in the Red Sea area carries the risk of a new rise in inflation. The troubling geopolitics in the Middle East show no signs of abating anytime soon. That gives the US currency a chance to strengthen again. In addition, markets have lowered their expectations regarding the timing of the first interest rate hike in the United States. A majority of 84% believe that the Federal Reserve will make such a decision at its meeting on May 1. Moreover, as the FEDWATCH tool shows, more than 30% of them expect a half-point rate cut. Meanwhile, 0.8% of the bulls expect a 1-point hike. Looking ahead, this week we'll see the release of key economic data from the United States. These include the Consumer Spending Index, GDP, and inflation data. On Thursday, the European Central Bank's interest rate decision will be released, and the euro may put pressure on the US dollar index. Against the backdrop of a strong US economy and Japan's lunar mission success, the world's second-largest economy continues to face multiple challenges. China's real estate crisis is deepening, and sluggish domestic demand is exacerbating deflationary risks. Yesterday, Chinese officials made new pledges to take more decisive and effective action, and they were met with skepticism by the market. The country's domestic assets have come under pressure. The Chinese government wants to tap some 2 trillion yuan from the offshore accounts of Chinese state-owned enterprises, and this fund will be used to buy back mainland Chinese shares to prop up the stock market. However, this again raises what City Index senior market analyst Matt Simpson called an evergreen question resurface. Will enough be promised and accepted to revive the economic growth? We will see whether yesterday's statements by the Chinese authorities are just talk or whether they will be followed by a decisive action. Nonetheless, the Chinese news caused risk indicators in the Asia-Pacific region to rise, and the Australian dollar had a very volatile session today. Under the influence of conflicting factors, the Aussie went through several ups and downs within the daily range of 0.6560 and 0.6610. On the one hand, the Aussie's increase was supported by positive news from China and acres of Wall Street's overnight gains. In addition, the Reserve Bank of Australia is expected to lag behind other major central banks, is moving to easing its interest rate. These prospects are also giving the Aussie some upward momentum. However, the Australian currency is under pressure from the US dollar. Technically, the Aussie dollar pair is still trading in the bearish territory. Therefore, there is a risk that the pair will continue to fall to the 0.6530 and 0.6460 support level. In order for the Australian currency to continue the uptrend, it should break above the key of a 0.66 level and consolidate in the 0.6610 and 0.6650 resistance zone. The New Zealand market is very dependent on trade relations with China due to its size and location. Therefore, the reaction of the country's currency to the Chinese authorities' statements on the economic recovery is very positive. The Kiwi was trading in a range of 0.6060 and 0.6120 early Tuesday, but has dropped below the key level of 0.61. The next support and resistance levels are located at 0.6060 and 0.6130 respectively. Tomorrow, markets will assess New Zealand's inflation data. Analysts are predicting a decline. As a result, we will likely see more dovish forecasts from the country's central bank. Therefore, the Kiwi's bearish trend may get a new momentum. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below, and see you online soon.